2021 has been a nerve-wracking year for investors because of the unforeseen financial circumstances caused by the COVID-19 pandemic. But as vaccines roll out, lockdowns lift, and companies adapt to the changes, let's take a look at the top most profitable dividend stocks that you can invest in during this year. First up, we have consumer goods production company Procter & Gamble. This multinational giant is known for increasing its dividends to shareholders. In fact, Procter & Gamble have been increasing their dividends for 64 years straight. The reason why the company is able to be so profitable is because it owns well-known household brand names such as Pampers, Crest, Gillette, Tide, Head & Shoulders, Downy, and more. Procter & Gamble's stock price actually dropped by 10% in March of 2021, and it's been named one of S&P 500's worst performers this year. So, why are we still recommending that you invest in it? Well, for one thing, the fact that P&G is involved in the production of consumer staples means that it is unlikely that profits will ever fall because of external events such as epidemics, natural disasters, etc. We saw evidence of this during the COVID pandemic. P&G has seen an 8% organic boost in sales this year, and they achieved record fiscal growth in 2020. The company is able to enjoy some of the highest cash flow and profit rates in the entire industry. Investors are sure to feel safe when investing in P&G. Next on the list, soft drink manufacturing giant Coca-Cola. Like Procter & Gamble, Coca-Cola has a rich history of providing its investors with dividends. The multinational beverage giant has been increasing dividends to its shareholders for 59 consecutive years. You might be wondering, aren't sugary beverages falling out of fashion as people become more and more health conscious? Can Coca-Cola continue to maintain a profit forever? Well, the Coca-Cola brand goes well beyond its flagship sugary drink. The company now owns over 200 brands, including Dasani, Smartwater, Minute Maid, Honest Tea, and more. Its portfolio is just as diverse and expansive as its future prospects. The average dividend yield that S&P 500 companies generally give out lies at 1.4%. Coca-Cola has defied all odds. In May of 2021, shareholders were receiving an average yield of 3.1% in dividends. Because investors are attracted to Coca-Cola's reputation for increasing dividends each year, it's unlikely that management will decide to back out of this promise anytime soon. Therefore, it's easy to say that Coca-Cola is one of the safest dividend stocks that you can invest in. While all others faltered, this next company turned the pandemic into its own profitable playing field. That's right, the next company on our list is AstraZeneca. AstraZeneca is a pharmaceutical company that made a household name for itself when it began producing and distributing millions of COVID-19 vaccines. There have been plenty of fumbles as AstraZeneca adapts to its newfound fame, but it's important that investors keep their eyes on the company's long-term prospects. Over the last 5 years, the shareholder return from AstraZeneca has doubled. Its earnings are expanding rapidly, and the revenue increased by 11.2% over the year. The current dividend yield lies at 2.5%. The coronavirus vaccine is AstraZeneca's most well-known product, but it's certainly not the only medicine in its portfolio. The company has been developing cardiovascular and oncology treatments recently. 3 drugs, Tagrisso, Imfinzi, and Linzaparza, have seen sustainable double-digit sales growth. A diabetes drug called Farxiga also had a remarkable sales growth rate of 60%. AstraZeneca also recently acquired a rare disease drug manufacturing company known as Alexion. The rare disease market is highly fruitful because there is rarely any kind of competition, so the company can set high prices. The future looks bright for this pharmaceutical giant and its investors. The next company on our list is wireless communication technology producer Verizon. Verizon is another company that often attracts income-oriented investors due to its dividend yield, which has been increasing for the past 14 years. The company has much less debt than others in the industry, which acts as reassurance for investors. Indeed, the onset of 5G mobile technology is all set to benefit Verizon more than ever before. In 2021, New 5G promotion ads led to Verizon springing ahead of its competitors in terms of sales revenue, surpassing expectations of most market analysts. The company predicts that as 5G services launch, more and more consumers will continue to upgrade to unlimited mobile data plans. The firm wants to spend $10 billion on wireless 5G infrastructure in the coming 3 years. Those who hold on to the Verizon stock during the company's investment and growth phase are bound to see big returns in the long term. Keep in mind that the current dividend yield for Verizon is 4.49%. The next company is another consumer goods manufacturer with bright prospects, Johnson & Johnson. Consumer goods manufacturers have fared much better than other companies during the pandemic. Johnson & Johnson is the owner of brands such as Band-Aid, Neutrogena, Zyrtec, Tylenol, and more. In addition to this, Johnson & Johnson also enjoys stable, long-term profits from its operations in the pharmaceutical industry. Johnson & Johnson made headlines this year for developing their single-dose vaccine, which was expected to benefit communities that were harder to reach for a double dose. Despite many hiccups and conspiracy allegations during the process of vaccine distribution, Johnson & Johnson has seen a successful year. The company's sales revenue increased by 7.9%, and it now lies at an impressive $22.3 billion. J&J's dedication to research and development is a driving factor for their success, and they have currently 10 more drugs in the approval process, which are bound to drive profits up even further in the future. Next up, we have a retail investment trust called AGNC Investment Corp. AGNC Investment Corporation is a real estate investment trust, REIT, with a current market cap of $8 billion, which makes it one of the largest internally managed residential mortgage REITs. In 2020, AGNC suffered from the damage that the pandemic did to the stock market as a whole when its stock dipped to $6.25 in April. However, the company is currently trading at $13 to $14 after achieving a record high at $19.65 in April. The company's dividend yield is at 8.81%, so we think it's a must-buy for income-oriented investors. Another consumer staple producer that has recorded groundbreaking growth, Target. Target is another large-scale retailer that thrived in the panic created by the pandemic. Due to closure of non-essential stores, shoppers flock to Target stores to fulfill their shopping needs. It's a stable investment option because its profits are rarely affected by external events. People will always need to buy groceries. Sales in certain departments, such as electronics, may drop during pandemics, but its essential products are always there to carry the weight. The company's innovative contact-free buying options made it an even more appealing option for buyers. Their digital sales grew by 145%. Talk about adapting to the pandemic. Investors will also be happy to know that Target reported sales growth of more than $15 billion in 2020, which is more than the past 11 years combined. Target is a safe business to invest in during tough times, and it has been delivering increasing dividend yields to investors for 49 consecutive years. Our next suitor is tech giant Microsoft. As one of the largest companies in the world, Microsoft has been known to dominate the PC and laptop landscape. Its services are not limited to its flagship Windows operating system. It has a diversified portfolio consisting of software, video games, internet services, and computer hardware. They've also maintained a 19-year streak of dividend increases. Microsoft stocks have seen several spikes this year because of the launch of Windows 365, which is a cloud version of the original Windows operating system. They also introduced Windows 11, which featured a new user interface, performance improvements, and other features. They've even got one foot in the healthcare industry, as they acquired Nuance Communications, a software technology company that creates artificial intelligence-based healthcare solutions. Clearly, the tech giant has been seeing a fruitful year. Their sales growth has accelerated rapidly, and in September, they are expecting to generate $43.75 billion in sales. It's no surprise that they have benefited during the pandemic, as the new work-from-home norms have driven up demand for PCs worldwide. Next, we have the ever-famous consumer electronics company, Apple. Apple has been the harbinger of touching success stories time and time again. From revolutionizing home computers with the launch of Apple II, to introducing innovative customer products such as the iPad, iPod, iTunes, and App Store. Currently, the company draws most of its profits from sales of its flagship iPhone. Apple remains a stable option for investing because of its incredibly loyal consumer base and its interconnected portfolio of products, which are all designed to be used together. The company has only been paying dividends for a few years now, and since it is making stable profits, it is expected to keep paying dividends for the next few decades. That's all we have for you today. Don't forget to hit that like button and comment down below which of these companies you'll be investing in during 2021. Don't forget to subscribe to our channel and hit the notification bell so that you never miss another video.